Welcome back, everyone. My name is Michael LeBlanc, Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thank you very much for joining us again this week for Next Week Today, where we're going to cover off everything that we've seen in the market over the last week and what we see coming up, and try to keep you informed. As always, with everything we cover in these videos, keep in mind everything we talk about is for educational purposes only. Do your own due diligence or reach out to a professional to review your situation and make sure that you're getting the advice that's appropriate for what you're looking for out of your portfolio. You can always reach us at mikeonmoney.com. All our previous videos are there, and you can all our contact information, email, phone is all on that site. You can just go there, and we're happy to answer any of your questions. And as always, today is a live webinar, but you can always send in any questions you might have, even if you're listening on a replay or on our podcast. We're happy to answer any of your individual questions. So as always, we start with a little bit of a COVID update. Really not going to spend a lot of time on it. I keep on saying that, but we're really not going to spend a lot of time on the COVID update because not much has changed. Pretty much things continue with the virus spreading. We have lockdowns across the country at different levels, depending on where you are in Canada. And we're seeing some in the United States. The biggest challenges we're seeing in the United States is people being off work, so lack of labor. So, on top of the hiring problems, all the different industries we're having now, with more and more people being infected and being at home, people just calling in sick. There's just less and less people to work. So that's becoming a big challenge, which we'll see are playing out here. But we won't touch too much on that. Just touch a little bit on, of course, the truckers' protest. The Canadian government put in, after delaying a little bit, they did put in the truckers' requirements to be vaccinated to cross the borders. So there's a bit of protest pushback on that. Of course, that puts more strain on the supply chain, which was already in existence. Which is affecting everything from inflation to availability, and if you're out there shopping for different things, we are starting to see some empty shelves in different areas and different qualities of product, especially when you look at the fresh products. We're starting to see that being affected a bit with that supply chain issue, with obviously the transportation issues and everything around that front. We're also seeing students. There's, two big sides of the story when it comes to students and parents. Those who are really happy that they're going back to in person, and other ones, who think, it's not safe for the kids to go back in person. So it's a complete divide, depending on where you are, what level of education you're at. We're certainly seeing it at the younger children level, but I'm also seeing the debate up. My kids are in university, and certainly seeing the debate on that front as well. And then lastly, I'll mention is a New York judge struck down the state's mandates, just saying that the governor overstepped. Basically, they should have gone to the state legislators to get approval for their mask mandate, although that mask mandate was due to expire in the next week. So, probably not a big impact to the outcome if you live or are around the state of New York. So that's it. As always, if you're doing any travel or planning any travel, do stay on top of the rules of where you're going, and also the Canadian rules. It's constantly in state of flux. Sometimes for the better. The UK and Norway just lifted their test requirements if you are fully vaccinated, but do double check what the definition of fully vaccinated is, dependent on the country you're going, not just for how many shots they might think you need, because I think the UK is moving to 3 vaccine or the booster to be considered fully vaccinated, but also which vaccination you have, because some countries don't have the same approvals that we do in Canada. So do stay on top of that if you're looking to do any travel, certainly in the next few months. So what are we seeing out in the economy here today? Well, we're looking for a lot of data. We're going into earnings season, so we're looking at the home price index coming out for November. We're also seeing the consumer confidence board for January coming out. American Express is looking to report. General Electric, Johnson & Johnson, Raytheon, Canadian National Railway or CNR, Microsoft, Verizon, and many, many more. So we're headed into that season, that time of year. So these are just kind of the top headliners that we're looking for this week. So we'll stay on top of that because that's really going to lend into what type of volatility, what type of markets that we're going to see as we finish this week off. It started off pretty exciting, which we'll cover. So the stock futures fell a bit this morning, and as we saw another really volatile day in the markets. If you followed it yesterday, we saw the markets drop into correction territory temporarily. They bounced back to a full recovery by the end of the day. So quite a swing, a lot of opportunity. A lot of opportunity to jump on those prices. Last week, if you remember me saying, and even in December, saying that we were expecting a volatile year in 2022, mostly driven around those interest rate concerns, which is exactly what we're seeing right now. And volatility does mean opportunity. So there are opportunities to jump on these pullbacks, to take advantage of that, whether you're in individual securities. But even if you're not, even if you are, in individual securities, sometimes when we see the big swings we're seeing right now, grabbing an ETF, makes a lot of sense if you just want to play a particular sector or even the broader market, right? We saw the broader market pull back pretty aggressively. Or maybe you wanted to take advantage of one particular sector that had a bigger pullback than expected. You can certainly use an ETF rather than trying to find that one position or that one company within the sector that's going to bounce back faster. So a little bit more diversification in these very aggressive pullbacks. We saw the same thing this morning. We saw the markets, pretty much starting same as we saw yesterday, but a much faster rebound today than yesterday. So the market is still showing resilience, but obviously there's a lot of tentative concern out there because when the sell-in starts, people are piling on and jumping on that. And all this is really geared around the Fed Reserve meeting later this week to kind of give guidance for March as to whether they're going to when they're going to start raising those rates. And if they give any kind of news as to what that hike might look like. Also, we got a bit of news where the digital dollar, we've talked about cryptocurrencies and how the governments around the world, the central banks around the world, have been really monitoring this process and not liking it. Obviously, there's a lot of controls when it comes to countries' currencies, not just trade, but money laundering, taxation, all these different things. So, to turn over currency to a crypto where they have no regulation or no tracking abilities is not really likely, or, certainly they're going to get a lot of fighting from governments. We're already seeing that, in some more aggressively regulated countries, how I put it, if you put it that way, with China banning cryptocurrencies. Russia now taking steps to, ban mining and trades of cryptocurrency within their borders. And now we have the U.S. Fed basically saying, okay, well, we're looking at a digital currency of their own. What would that look like? And they've kind of kicked it over to Congress to bat that around and try to figure that out. So still probably going to be several years away. But all this means is there are, the lawmakers and central banks within the major countries are really not a fan of cryptocurrency becoming a standard, a way to transact business. So we'll keep an eye on that. But going over to Congress does mean it's probably nothing that's going to happen. Oil bulls are encouraged by the low inventory numbers that they're seeing out there and the current demands. We talked a bit about last week. We saw a little bit of weakness in oil in the last quarter rather, of 2021, but that was just, I think a little bit of optimism that we were going to catch up to demand at the levels that we're seeing it. And I've been talking about that edge crunch. So we're seeing oil having a good day, continue to have a good day today, and certainly a good start to the new year through 85 today on the oil front. Other news, market churn. The markets that are churning are battering investors out there. There was as I mentioned, a lot of movement on the global front as far as the indexes go yesterday. So be patient, as I said. Take advantage of these. It's always easy to say, sell into bull, buy into the dips. Definitely that does not mean sell out your whole position when you see a good day and wait for a bull day. Not recommended market timing. I'm not saying that you're going to be able to pick the tops and the bottoms, but it does bode well for portfolios to trim a little bit of your profits when things are going really well, especially in a volatile year. Be a little patient and look for a buy-in opportunity. You're not going to get the lowest point. The whole thing is you're just getting a little bit better value, and those little movements will actually make an impact on your performance over time. U.S. activities did slow in January based on Omicron, as I mentioned. The big challenge just layering it on top of businesses where they're having trouble hiring people, but then now we're having a hard time keeping people at work as more and more people are being affected by the Omicron strain. The hospital numbers are up, still doing well, but a lot of people are just staying home, which is the advice that they're being given. The S&P eyes the first correction since the 2020 pandemic. As I mentioned, we did cross into that territory temporarily yesterday, but recovered back again. So we'll see if we actually officially cross and stay into a correction for any period of time here as we hear what the U.S. Fed has to say. On that note, there was a lot of talk over the last 2 years about meme stocks. Of course, GameStop being one of the most famous, being driven by the subreddit, where people on the online trading platforms going out there and driving up the price to really unsustainable levels. AMC Entertainment was another one. BlackBerry was in that group for a while as well, but they've all fallen off dramatically here in 2021, where we've seen a massive pullback in all those names. Definitely. The unfortunate part of that is some of those investors that were buying at the highs during the meme stock rallies. They were the small investors, right? They're the ones least likely to be able to absorb those losses. So it's not great to see when you see them fall from those high valuations down to reality. So we'll see if we see any swings or movement in those, but so far we haven't seen any recoveries in them over the last couple of days, certainly. And the U.S. House is to unveil a chip investment bill this week. So this is the U.S. Looking to bring more manufacturing or bring more microchip competitiveness to the U.S. economy. Because one of the big challenges we've seen in this supply chain crunch is microchips. Almost everything has a microchip in it today, whether you like it or not. Your fridge, your cars, your phones, obviously computers, games for kids. Everything kind of has a microchip in it these days. And we ran into a shortage. And the bulk of that manufacturing happens in China. So the U.S. is moving to put a bill into place to really encourage more of that to happen in the United States, so they're less reliant on other countries, not just China, but other countries in general, and looking to grow that production level here in North America in order to supply not just the current supply chain, but future supply chain. So let's take a look at what's coming up this week. Coming up, as I mentioned, we're looking at the Open House Committee slated to start a 2-day monetary policy meeting. Really going to be interesting to hear the language that comes out of that. They're obviously not going to say we're going to do this on this day in this amount, but what we look into is the language, how bearish, how bullish, or sometimes they use in those meetings the term hawkish, to see, where they're looking at moving interest rates and how quickly. We've had a very low environment for all of the pandemic, since March 2020, historically low. Now, remember, this is going to happen. We are going to see those rate hikes. It comes down to now is how many rate hikes this year and how much, and how much the economy can absorb. So really what we're looking for is how much they're going to do on the first one. Are they going to be aggressive? Are they going to be soft to test the waters, if you will? See how much of the economy can absorb and slowly creep that up, and then pause when they need to, because their goal is not to bring it way down, is just to slow it down until inflation and things get up. So even if we see over the year even 2% interest rate hikes, we're at near zero. So moving that up is only going to get us to pre-pandemic levels. The economy obviously was operating perfectly fine prior to that, and borrowing rates were still very historically low prior to the pandemic. So it's not the end of the world, but we just have to monitor it and look for those buying opportunities as we see the volatility come into the market. To mention, Microsoft's going to be reporting this week. We are expecting to show some growth for the second quarter and revenue. As they continue to expand the demand for cloud services, especially their Office 365 services. People are still working from home. It's still, one of the main powerful tools being used in business today. And also looking at, what they're going to do with that acquisition of Activision Blizzard, a video game company, for $69 billion. If you don't follow the gaming community or the gaming stocks at all, Activision was certainly embattled with a lot of controversy, about how they're treating their employees, everything from discrimination to sexism to everything. So they had a lot of problems going on there. Microsoft came in, didn't really get it at a huge discount, but they managed to pick it up. So this really expands up Microsoft's offering when it comes to gaming, picking up 2 other platforms earlier, or in 2021 and 2020, making them the 3rd largest owner and producer of video games in the world, with Sony and Tencent being ahead of them. But this also, they have their Xbox Pass, where they offer, games on a subscription basis. So this really builds out that suite, which would, possibly allow them to really build out their subscriber base. And the important thing to look at with subscriber bases, and if you look at whether you look at Netflix or you look at Disney Plus, who's done fantastic job, especially through the pandemic with that, is subscribers are recurring revenue. So yes, the people used to pay $50, $60 for a game, and now they're only going to be paying $10 a month, but that's $10 a month ongoing. So if they can really build out that subscriber base, that can be very meaningful for Microsoft. And also, owning the titles of those games means they can launch exclusives on their platform. Now, most of these companies don't do exclusives forever. They just do exclusives for a period of time to kind of get more and more subscribers to get access to the game. And once they're on, hopefully they stay as subscribers as they release it to other platforms afterwards. So something to really watch as Microsoft made that move. And of course, Microsoft, again, when we talk about the pullbacks and using ETFs, you can definitely look at ETFs. There's the different ETFs that invest in the FANG stocks, the top 5 tech companies, if you want to call it, and Microsoft in there, where you can get access to things like that. Johnson & Johnson is also expected to report their 4th quarter results, the first earnings since announcing a plan to spin off. So if you didn't follow that, JJ in 2022 here is going to split into 2 companies. We've seen this actually quite a bit lately, but Johnson & Johnson is going to split into 2 companies, one focused on the pharmaceutical and medical side of things, and the other one focused on health units, or their consumer goods side, basically. So we haven't got all the details of what that's going to look like yet, but it is coming up in 2022. So hopefully we'll get some more numbers around those 2 units and what they're going to look like when the spinoff happens. So if you own J&J, definitely something to watch and look for. We own J&J, so we're following it very closely, but it's always been a good conglomerate to own. On the U.S. side, the top news: Kohl's shares surged massively on a takeover interest from Sycamore Acacia, almost 30% up on the stocks and in the market, which has been really red. It was nice to see. They've been approached basically with a potential takeover valued around $9 billion. So we'll see how that plays out. This is kind of one of the bigger and more recent bids or mergers or takeover acquisitions, whatever you want to call it, when it comes to kind of the brick and mortar business since the pandemic hit. Google's facing another lawsuit. I think this is a weekly thing we're going to deal with. Is Google, Facebook, all the big tech companies, anything that has to do with antitrust. We've talked about the number of suits that are out there, both in the United States and in the UK, or pretty much around the world, the EU as well. But Google is facing lawsuits over the location tracking practices that you use in the United States. We've talked a little bit about this in the past. Basically, a lot of these apps are tracking you. Not just your searches. Obviously, people, that anything you search in Google, they save and make a profile of what your interests are. Things that you're looking at. But they also track kind of where you're going, and they share that. And multiple different apps and different sites have little bits of information, and then companies bring that all together and can build a pretty good profile of what your shopping habits are, what your interests are. Where you tend to go, what shows or restaurants you like to go to, all these different things. So there's a big lawsuit for Google on that, and these things are just going to keep coming through 2022 as it seems to be pretty focused. Activist investor Blackwells is pushing for the Peloton CEO to step down. If you haven't been following, John Foley at Peloton has been under fire over the performance of Peloton over the last few months. Peloton had a heyday at the beginning of the pandemic. Of course, gyms all shut down. People couldn't get out and work out. So things like home fitness became a focus. Peloton, being early into the market, was a huge benefactor of that. You basically couldn't even order one of their Peloton bikes forever. There was big long lead times for them. This was before we had the supply chain issue. Demand was outpacing supply massively. The subscription rate, again, going back to subscribers, was through the roof. Since then, things have fallen off a little bit. More and more people going, essentially more and more. There's still a lot of people not going to the gyms, but more people certainly going back to the traditional canceling their subscriptions. More competition coming into the market. Peloton also had some problems with their treadmill, where I believe there was a death of a small child and injuries. So they had, a bit of problems around safety concerns of using it, especially with small children around. As their stock, started to plummet, they didn't slow down their production. Continue to expect that demand to stay that high. So now they have sales on bikes and they have excess inventory all over the place. So a lot of problems going on with Peloton. So an activist investor is basically looking to take advantage of it, buy into Peloton cheap, and hopefully another company out there, a competitor, will buy them up. Apple entered the market with their Apple Fitness, which doesn't have equipment, but they do have like the online classes. We've seen NordicTrack get into the market with both equipment and online classes. Amazon getting into it. So there are a lot more competitors out there. So we'll have to see if they become a takeover. Halliburton is doubled the quarterly profits and boost dividend on as oil rebounds. So Halliburton, being a big oil and gas producer, are out there, and the fourth quarter looked really well. And this just plays in the theme that I think we're going to see this from all the oil and gas companies over the next couple of months. EU regulators are set to rule on Pfizer's COVID pill. So we've seen this in in US and Canada, North America, approving the Pfizer and the Merck pills for treatment. Now we're seeing the EU. EU looks like they're going to approve Pfizer ahead of the Merck pill. And we've seen some reports basically saying that the the numbers on the Pfizer pill is more effective than the Merck. Doesn't mean the Merck's not good, just that the Pfizer's been a bit, the early tests are showing the Pfizer being a little bit more effective. So that's treatment after you have COVID. So if you have more severe symptoms of COVID, this is a medication to help reduce those and help you stay out of the hospital. Basically, the goal of these is treatment that you can do at home. On the U.S. dollar front, we could see further appreciation as we go into the Fed meeting. Like I said, if the interest rate is going to be sooner than later, we're definitely going to see more strength when it comes to the dollar. So we'll keep a very close eye on that. The euro continues to look a little unappealing, especially with the standoff between Russia and the Ukraine continues to kind of heat up. So a lot more pressures on the euro. Still like the pound is doing well, and we could see some continued strength there as they hopefully unwind this Brexit thing. Obviously, Prime Minister Johnson's got a lot of problems going on, which could stagger things depending if there's a leadership challenge there and who the potential new leader might be. Bonds continue to edge a little bit higher. Again, all on the Fed meeting coming up. And we don't expect that to kind of change. Commodity front, as I mentioned, oil did get over 85 this morning. We also saw gold finally move a little bit to $18.44 an ounce this morning. So as we talked about previously, 2021 was an odd year for gold. All leading indicators should have said gold would have had a really good year. Didn't have a bad year. It was just flat, but it didn't react with the inflation the way we expected. There was a lot of talk last year about transitory inflation. A lot of people, expecting it to pull back as the supply chain got fixed. We moved past that theme, basically saying, there is real inflation, even if there is part of the inflation transitory, there is real inflation out there, and it's not going away anytime soon. So with the actual movement of interest rates here, we're hoping to see gold actually start to react the way it should. But remember, gold's a great hedge in the portfolio and should be represented, but be cautious over your weightings there. And gas prices remain steady, although we are seeing movements by other governments around the world, like the EU and the UK, looking to put in measures at least to try to slow the cost of gasoline. But over in Europe, of course, that's going to continue to be a problem with the Ukraine-Russia issue, as that Russian gas supply is going to be under strain. So with that, that's our talk this week. Thank you everyone for joining us. Remember to go to mikeonmoney.com if you have any questions. If there's any information you would like us to cover or any topics you'd like us to include, always happy to hear from you. And as always, stay safe out there. Looking forward to talking to you again next week. Thanks all. Bye now.